Hello friends, and welcome back to the weekly talks with Quiz Realty. Today we're going to talk about some alternative ways to purchase a property. A house ownership is an ultimate goal for many people. However, not everyone is financially prepared for such a commitment. Therefore, the financial institutions may not extend a loan for the people in such a situation. Are there any other options? Yes, there are. And we're going to talk about those options today. You may have heard many different names, such as seller finance, rent to own, lease to purchase, and so on. Those are different types and different flavors of the alternative ways of ownership. So we'll cover several of them in very basic manner, and if you have any more questions, you always can contact me or Quizzy Realty. Any of my staff is willing to answer all of your questions and try to help with your situation, because your situation may be different from other people, and your options may also require different approach. So we'll start with the simplest one, which is the seller's finance. The seller finance assumes that there are only two parties in the transaction, so you don't have the financial institution or third party involved in this transaction. Basically, your seller is acting as a bank. There are some pros and cons to that. The pros for the buyer is that you as a buyer become an owner of the house at the day of the closing. The cons is that now you're responsible for all the property taxes, for insurance, for HOA, and any other fees that may be attached to the maintenance of the house. On the top of that, of course, you have to pay a mortgage. But this is a typical situation if you go to the financial institution. The only difference may be in the interest rate. Usually the seller delays all his profit from the selling house. For that, he is willing to delay it, but at the same time to generate a little bit more by collecting the interest rate from a buyer. So that interest rate is probably going to be higher than what the market interest rate is at that particular moment. And the whole seller finance situation is probably going to last from 3 to 5 years, because the sellers are not willing to wait for 20-30 years as the banks are. And in this case, you will have to refinance in that particular time frame. This is actually better for you if you refinance. The earlier you refinance, the better for you. Then you're basically reducing your interest rate. Even though a seller may approve your application faster and much easier than any of the mortgage companies, it's not very common where you can find a seller who is willing to do that. They basically don't want to take a risk. They don't have experience how to do this, how to do the background check on you, and how to make sure that you're going to be a responsible payer. Therefore, you may be looking for some other options. Next, we're going to discuss the lease to own. As a company, Quizzy Realty helped a lot of people to close the transactions and become owners of a house through this method. The lease to own means that instead of buying the house right away, you first rent it for some period of time. It may be 2 years, it may be 3 years. Some people prefer the longer term, such as 5 years. During this term, you live in the house, which ultimately you're going to be buying, but it also provides you with an option. At the end of the period, you can buy it or you can walk away. In such a situation, you basically may decide if this is a good option for you. If at the end of the term you think that the purchase may not be feasible, or it costs too much, or you don't like the area, or you don't like the house, you can always walk away without any consequences. Now, this option comes with the price. That's pretty much any option. And this price is what the company who provides you with the money to rent and own this house is generating the profit from. In such situation, let me explain it from the point of view of quasi-realty, or what my subdivision of quasi-realty called quasi-rent. Quasi-rent is basically acting as a buyer. So we work with clients who want to own the house but cannot get the regular or conventional finance through the mortgage companies. There might be several reasons for that, including their credit history is not good, or maybe not long enough. Their credit score, they need to work on that a little bit. And it also could be, which is very common, the people who work for themselves and basically not on W2 but 1099, they may need some at least 2 years of tax returns before they can actually finance with a mortgage company. So for these 2 years, instead of waiting and seeing as the house market keep growing, they may not own, but they may purchase a house, they may rent a house, which ultimately they're going to be purchasing at this time, and then see how the market behaves, see how the credit score behaves, and see how the business behaves, and make an ultimate decision of buying or not buying. So in this situation, quasi-rent acts as a buyer. We come in place, we search for the house, we present this house to the potential owners, and they can tell us if they like it or not. If they do, then we go ahead and we purchase it for them. With that, they become the tenants. The only thing they need to do before we go ahead and purchase the house is to put the down payment. The down payment usually comes in the amount of 2.5 to 5% of the purchase price. Of course, we'll have to do some documentation on those people, just to make sure that they are responsible payers and that they will be able to pay the mortgages. Now, in this case, it's not going to be a mortgage, it's going to be a rent. So we basically go through the same procedure as if we would go through picking the tenants or doing the background check on the tenants. During this time, the tenants pay their monthly payments, and that's what's important. This monthly payment is usually very similar to the rents in that area for similar houses, meaning that they don't have to go and rent for 2 years and then lose all the money and then go and try to purchase a house. In this situation, they actually rent the house, they live in it, they adjust to it, they can furnish it the way they want, and then they buy the house from us. Not only that, the monthly payments that they pay every month actually reduces the final purchase price. So at the end, they buy it at a cheaper price than what originally the house was bought for. The other good thing is that the price is fixed on the day one. So the price is not going to change for the duration of the contract, which again can be 2 years, 3 years, 5 years. It's very rare that anybody would go beyond 5 years just because it just economically or financially it doesn't make much sense. So seller finance and rent to own are the most common alternatives that you may see on the market. There may be some flavors of those, and they will have to be adjusted to certain situations. And again, we can discuss this. Please contact us through Facebook, follow us on Instagram, and you can always call us or email us. Have a good week, and we'll see you next Monday with a new topic, discussions with quasi-realty.